Ladies and gentlemen, welcome back. This is Christopher Aaron. It is November 10th, 2021, and let's talk about the record high inflation that was reported today and the fact that gold and silver and the mining complex was one of the only areas in the capital markets today which was higher on this record inflation report. Really critical price action to be witnessing right now. A huge change from what we've been observing over the last few months when gold and silver had been selling off on the high inflation from this sort of perverse psychology that had permeated through the markets that high inflation was going to cause the Federal Reserve to act, and therefore high inflation should be interpreted as lower inflation and therefore sell our precious metals. That has turned on its head here over the last couple of months. That's why we've been following this very closely. Even though sentiment had gotten so bad in the precious metals recently, it looks like we have seen the turn and the big move is still ahead of us. So let's look at the evidence for this week. I want to remind you, if you are a higher net worth investor and you are looking to almost achieve a double of the upside in these gold and silver miners, make sure to watch the video that was recorded 2 weeks ago. It's the very last one that was published on the power of investing with warrants. When you get warrants simultaneous with your investments in the gold mining sector, it nearly doubles your upside with no additional risk. Make sure to watch that video, and let's get on with the record high inflation. Hit the subscribe button. Check out our feed on Twitter. Sometimes we don't have chances to post a video, but we do have a moment to post something quickly on Twitter. Very briefly, please make note of our legal disclaimer. What are we talking about here? Inflation keeps getting worse. Look at the reports that have come out today, this morning here. Okay? U.S. Consumer Price Index. Now, we know that this index is messed up as it is because they've made all sorts of adjustments to this index over the years to try to lower how much inflation is actually being reported. This is not conspiracy theory. You can go back and look at previous administrations, especially under the Clinton administration. They made a lot of changes to how the CPI was reported. They do things like hedonic adjustments and substitutions, and they say, well, if the price of beef goes higher, we're going to substitute chicken into the CPI index. That's not really the point of the index. The point of the index was to measure a stable basket of goods and services. So, okay, beside the point, even with the messed up CPI numbers that we have now, it is showing record high inflation. Look at this, surging 6.2% from a year ago, 6.2% theft. Outright theft against the American population and anyone on a fixed income. How much is the yearly increase in Social Security payments? I guarantee you it's not 6.2%. So they're robbing from pensioners. They're robbing from those people on fixed incomes. They're robbing from people on Social Security to pay for bank bailouts, to pay for unwinnable wars, to pay for unwinnable battles against various threats, perceived or otherwise. What else? If we strip out food and energy, which, we can't really, but let's say if we wanted to do that, we see the inflation the fastest still in 30 years. So this was the news today. Now look at the critical point here. What did not rise on the inflation? The general stock market. Look at this. The Dow dropping 240 points on the high inflation. This is the opposite of what we have seen over the last year. We've seen high inflation, stocks rising, and gold falling. Well, today we saw stocks falling and what? Gold shooting higher, almost $40 intraday. Yeah, giving it back about half of those gains, but still finishing comfortably positive for the day today. And the critical point is breaking through. We have been looking at this resistance here at 1835. Guys, for the last 6 months, gold has been unable to register a daily close above 1835, and it did it today. What? On this record high inflation. Remember, just 3 months ago, record high inflation, you were seeing gold do the exact opposite. It would drop $30 or $40 in a day. This is a huge change. Most mainstream investors are not paying attention to this. But if you think about it, let's look at the broad asset comparison intraday today. Look at the asset classes that finished higher. It was not the general stock market. Look at this. Gold miners leading the way, then silver, then gold. We have the silver miners in there. Now, who is paying attention to this? I mean, think about this. If this is not just a one-day phenomenon, okay? If there is high inflation, I mean, the Federal Reserve has been wrong about inflation for the last year. They changed their language at the last Fed meeting. They said it was going to be transitory going back a few meetings ago. And at the meeting 1 week ago, they took out the phrase transitory, and instead they said, now we expect it to be transitory. So they're softening their view on how long that transitory phenomenon is actually going to last. They also said that we now think inflation could last well into 2022, whereas previously they said the inflation would be ending this year, 2021. So they keep changing the yardstick. They keep pushing the goalpost back further. If this inflation, let's say the Fed is even surprised. Let's say the inflation doesn't last just into 2022. Let's say it lasts into 2023 or 2024. What if we don't just have one day of this type of phenomenon where precious metals are leading the way? What if it's the next 2, 3, or 4 years and everything else, all the other assets, let's say mainstream stocks and bonds are selling off, right? This is the potential. I mean, I'm not making up the headlines. You see the headlines on the front page of CNBC right here. I'm showing you the price action. Now, bonds were lower, which makes sense. Finally, we're seeing the divergence between gold and bonds. Why? Because the worst thing to own in a high inflation environment is bonds. You're getting depreciated dollars in the future. You do not want to own bonds. I think bonds are probably the biggest bubble in the world, but we're finally starting to see that divergence between bonds and gold. Now, the one interesting thing here, the one anomaly I would say, is that the sell-off in the general assets here, especially in the S&P 500 and in bonds, caused a weird kind of perverse flow into short-term bonds, which we can call the US dollar, bonds of zero duration maturity, are Federal Reserve notes. So you saw basically a fear reaction going mostly into precious metals, but also into the US dollar. So I think when we see on this high inflation, think about this for a moment, when we see stocks, bonds, and the US dollar lower, that is going to be when the single premier asset class in the world to be left standing is going to be precious metals. And just go out. Just talk to your friends at the bar. Talk to your friends at the coffee shop. Talk to your friends at work. Talk to your friends that you meet out on the path in nature or at the dog park or wherever it is you go. And ask people, are you investing in precious metals? And I will be willing to bet that not 1 out of 100 people is even aware that it's possible to invest in precious metals, let alone actively doing it right now. So when you think about the potential here, if this type of dynamic is going to go on for the next few years, goodness, we could really be at the beginning of a giant macro thesis here is what is setting up. Now, let's update the gold chart. This is the primary gold chart. We've been in this consolidation for the last year and a half. And just over the last couple months, it had most people convinced that it was never going to go higher, that gold was just going to keep drifting and drifting and drifting, maybe a little lower, maybe consolidating. But sentiment had gotten so poor in this sector based on my empirical observation, communication with a number of people, observation of trends within the industry. It had gotten so poor at exactly the most bullish time when inflation was getting higher and higher. And so look, from a technical basis, what we have seen today, let's fill in the chart here. There is the key, okay? Primary chart going back from 2018. Primary trend still intact. Year and a half consolidation, sentiment horrible. Still a few $100s below the all-time high here at 2,074. However, we've been in this ascending triangle pattern here for the last several months, and we were saying over the last several months, it looks like this thing at some point here before the apex of this triangle is getting ready to do what? To finally break out of this 1835 initial resistance right here. You can see 1, 2, 3 rejections at 1835 just broken today. So this is very significant. I mean, we've been below 1835 for the last 6 months. And now we are above 1835. Look, we're not at 2,000 or 3,000 yet, but this gold chart is very constructive, especially from the standpoint of observing how good this chart looks with how poor the sentiment is and how few people in the mainstream media are actually paying attention to this. So we see the breakout today. Now, here on this channel, you're not going to hear me say every week, I think gold is going to $5,000 or $10,000 unless I have a reasonable expectation based on the chart to say something like that. And this chart at this point is a constructive chart. I will tell you that. This consolidation is looking increasingly constructive. That said, I take the chart one chunk at a time. So when we see a break like this above a key resistance level going back for the last 6 months, but still a short-term resistance level, all I can say is, what is the next logical zone of price action that now that we've broken 1835 opens up? And that is this zone right here. 1835 plus or minus, especially on weekly closes, should be acting as support now going forward. And so gold now finds its way ready to start a new, slightly higher consolidation below the next critical resistance, which is this swing peak right here, which extends up to 1920. So highest probability, this is our expectation shown in green. And within that, I think it's going to look something like this. This is not trading advice. This is expectation based on visible support and resistance. And this is the warning sign that we're in the window here to get situated as this consolidation is playing out, let's say another 3 to 6 months in this next higher zone, because you do not want to wait for gold to make this move, which is coming. It's simply a matter of time. You do not want to wait for gold to make this move to be getting positioned into this market, into related markets such as silver, into the gold mining complex, into the highly leveraged private placements that we do that require you to commit a higher amount of capital for higher net worth investors. You do not want to be waiting. Unfortunately, my observation, if you're watching this now, I know that I'm somewhat preaching to the choir because you're paying attention here. You have been paying attention as this set of consolidations has been playing out. Most people will not really start paying attention to this market, at least until we break this double black line here, which is 1960, going back to these swing peaks in here. So for you, if you're paying attention now, I would say what I think is going to set up is probably a bit of a continuation here over the next 1 to 2 weeks. Then I would look for a back off, and I think that back off below 1920 is really going to be your last window to be accumulating here, let's say, in the low to mid 1800s, perhaps as we approach New Year's. And then I think this consolidation does basically what it's done here for the last few months, just at a higher level. And I'm telling you, when we get that breakout to new all-time highs, you look at the health of this 2-year cup consolidation. Can you see how this looks like a very rough teacup kind of rounded process that's happening here? And yes, there's a lot of jagged little points, but it's still a cup consolidation. Just remember where this cup consolidation is happening. This is happening right below the all-time high. When we break this thing, I think within the next, not only do I think, but I will have a fairly reliable target that I'm not going to reveal at this moment, but I will tell you it is approaching 3,000 based on a calculable amplitude measurement of the pattern going back before the chart that we're showing here. We'll discuss that another day. Right now, we want to talk about next few months looking exceptionally constructive here. Does not need to shoot higher to $3,000 this year. But I think this consolidation is setting the way for just tremendous moves. And then you think about what could happen in silver. We have not covered silver here in this video. The next video we will dedicate to more silver coverage here on this free YouTube channel. But really constructive price action that we're seeing. Think about it. The record high inflation now finally showing positive price action for gold. It had been negative. Every time we'd seen high inflation, you had seen gold and silver sell off. That is not what happened today. This is a huge change in the market. No one's talking about it. No one's talking about it, just flat out. Again, I offer you that challenge. Go talk to your coworkers. Go talk to your friends, your associates. Not the people here paying attention in the small gold community, but go talk to mainstream people. Who's paying attention to the fact that the precious metals were essentially the only large asset class higher today when everything sold off? If you're a higher net worth investor, you must consider doubling your upside nearly by accumulating free warrants with your gold and silver mining companies. This is what we are doing right now. We already have a group of investors that have come together, and we are taking part in these private placements together. We still have a little bit of opening left for the next placement, and that should be coming in mid to late November. But I can't emphasize this enough. If you want to talk about, look, if you have enough money to diversify into 4 to 6 of these placements over the next year, you should be accumulating these free warrants. This is life-changing stuff when you look at the reward and risk spectrum. Once again, make sure to go back and watch the last video. If you have no idea what I'm talking about here, and you've just watched the gold chart moving higher on inflation, and you're saying, okay, yeah, look, gold might go from, let's say, below 2,000 to 3,000 within the next couple of years. That's great. That's going to be, let's say, a 50% move. What about some of these companies that are going to move 500 or 1,000% higher, and then you're going to almost double that upside with the free warrants? Go back and watch the last video we did. We explain in explicit detail the power of these warrants. If you are a more general precious metals investor, there is nothing wrong with that. If you would like to follow along with us, we do videos like this once per week. Not only do we cover gold, but in depth we cover the US dollar, silver, the rest of the gold mining sector, as well as the open market gold and silver miners that we're investing in. Once again, remember the difference between open market. These are ones that you can just buy and sell in an instant using a standard online brokerage. The private placements are the ones that give you almost double the upside, but make sure you go back and watch that last video, and you'll remember you have to invest at least $10,000 at a time to accumulate those free warrants. So if you just want to invest smaller amounts, the service for you is called Precious Metals Intelligence. We cover the open market signals that we are paying attention to here. If you would like to speak to me one-on-one, Christopher Aaron, I am happy to help you. Doesn't matter whether you're just starting and you want to make sure that you're buying the best form of bullion for yourself. I do have relationships with several bullion dealerships. I do not take commissions from them. I simply look out for the best interests of you as an investor. If you're wondering proper ways to diversify in the gold mining sector, the silver mining sector, we sit down, we talk through it over the course of 30 or 60 minutes, however long you need. We hash out a plan together. Guys, think about record high inflation. Who's paying attention to it? Aside from you, aside from, the people, the forward-looking people watching videos like this, who out there is paying attention to this? I'm serious about this. Think about it. Think about the way that you are going to participate, because I think what's setting up here when gold breaks through that all-time high is going to be life-changing.